Hey guys, welcome back to my channel. So today I want to make a small little video on whether or not I think it's worth it for you to go with a prop firm, or whether you should actually go on ahead and save up money to trade your own personal capital and build that years of experience. Because I definitely think that there's kind of a line between you know trading your own money and going the route of trying to get prop firm money. And it seems like nowadays for a lot of people, the dream is so alluring to get money, to get 100,000, 200,000, even 400,000 to trade with. So a lot of people who haven't been trading for a very long time, that don't have as much experience in the trading business, are choosing to go to prop firms because, you know, as I will lay out here in a lot of the pros and cons of using a prop firm, um, it can be very alluring. So I do want to talk today about, should you trade your own money, or should you try to go with a prop firm, even if you haven't had that much experience trading and you're just kind of looking to gain more experience in the market? Is it a better choice to go with prop firms, or is it just better to save up some money and put that risk capital aside and do that? But anyways, so today, guys, as usual, I need to make this disclaimer: this is not financial advice. This is just purely for educational purposes and entertainment. If you guys need that, please go seek a professional financial advisor, or a lawyer or something like that. But anyways, let's get to it. So, should you trade your own money or prop firm? So some of the pros of using a prop firm is, obviously the access to higher capital, which means you get more leverage, you get more money, you have much more buying power. So you can have an account that's like 200,000 account, and with that account you can trade much larger, either lot sizes if you're trading with forex, or contract sizes if you're trading in futures, like how I am. So you get that ability to gain more leverage in the market, and it's I mean, it also depends, because as much as you do have the higher leverage, you also have um, certain rules and drawdowns you have to follow, which I'll get to when I get to the cons of using prop firms. But anyway, so one of the biggest pros of using a prop firm is obviously large amounts of money. There are people who are trading with prop firms um, that has even 100k accounts, which give them like the buying power of 500,000. So that's great. um, the second pro of using a prop firm is, obviously there's a smaller upfront risk to you. So a lot of people say there's no risk in using prop firm, but that's not entirely true. I've heard of people spending thousands and thousands taking prop firm challenges that they never pass, which means they never got a payout from prop firms. They just keep spending more and more money, and because of this smaller upfront risk, sometimes as low as $100 you can get a $50,000 account, or even like with some companies, like right now with Apex Funding Trader, for people looking to go into futures. They're running like a 90% discount off, so you can start a $25,000 account or a $50,000 account for as low as $20 or $30, which is super, super, super low, which means that that cost is extremely low, and that's great. So that's a massive pro of using prop firms as well. I am affiliated with Apex, obviously. However, the views in this video are all my own. Uh, but if you guys do want to get 90% off Apex, you guys can use my code below. That's completely fine. If you guys also don't, that's completely fine as well. But when it comes to the smaller upfront risk, it can add up over time, especially if you're not getting payouts from prop firms, especially if you're not making money. That is something you have to think about. The win rate in a lot of prop firms are are so low that you really have to consider it. You have to take other things into factor when you're doing this. I know the small risk upfront is very alluring to gain such large amounts, but you really have to think about it more when you're making this decision. So, potential help with your discipline. Um, so when I say potential help with the discipline, I mean like the most prop firms have either a daily drawdown limit or some form of drawdown. That could potentially help if you're trying to learn how to trade. If you have a $50,000 account, you can get a $1,000 worth of drawdown in a day. So that means, for the day, if you hit that amount, most prop firm you'll lose the challenge or the combine or whatever. Um, and with Apex, the prop firm that I'm affiliated with, um, they don't necessarily have a daily drawdown, but they have a trailing drawdown. So if you hit that, you also lose the challenge. So you know when you're doing that, it's like you have to really think about, okay, if I lose this amount of money, if I lose £500 today, I'm just gonna stop trading, because if I continue and I lose 500 more, I'll pretty much lose my account. So that could help with your discipline. However, what I find personally from someone like me who's been trading for years and years and years, I don't find you know the daily drawdown as something to necessarily help me as a trader. um I don't think it helps with my discipline personally. I like having the freedom to make my own decisions when I'm trading, and I really don't like rules, which is something I also get into a lot more when I talk about the cons. Okay, so the next pro is the fact that you know, you can trade like products you wouldn't have been normally able to trade with your own money. So for example, you could trade the Nasdaq, which is like, I think it's like at what 30,000. Wait, I have to check. But it's had a very large number. It could be like what, 20,000, 30,000. Um, so it takes a lot of leverage for you to trade any meaningfully in that. And I know with your own money you can trade micro lots, or the micros in futures, or smaller lot sizes like 0.01s or 0.02s or zero point 0.1 in forex. So you can do that and still gain access to trading the Nasdaq or the S&P 500 or whatever. But it's also, you make way less money when you're trading those smaller sizes. And obviously, if you want to make money, it you might want to think about prop firms in that case. But yeah, but that's one more pro of using prop firms. You get that ability to trade your larger sizes and potentially make more money, which we get to the next point, which is the potential of you making a large amount of money from a small investment. That is, if you're able to pass their challenges, and that is if you're able to get to the payout stage, which most people tend not to do. So you really have to think about that. um, Most people fail these challenges, most people don't get a payout. um, you know so as much as the ability to earn a lot is there, you have to think about whether or not you're going to get to that final goal. Okay, so now let's get to the cons of using prop firms. Cons is rules, rules, rules. There are so many rules with prop firms, and each prop firm have different rules, and sometimes the rules aren't clear. Like like back in the days when I was trading with my forex funds, which I've gone into ruin now. They used to have an equity that will trail your max stop out level by your equity. So a lot of times when people are in profit on a trade, and the trade pulls back on them, you know pulls back 5%, they're gone. Like their account's gone because of that equity um, trailing. And I think it's kind of similar with Apex and Top Step as well. So for people who are trading futures and using Top Step and Apex, that's something I mentioned before. I don't like the fact that they use these trailing drawdowns. I really don't like them. I think they just set you up for like a really bad day. They set you up for not trading the way you want to trade, and I just don't like it. Um, it's in a lot of times with Propfirm as well. The second con is the fact that you losing money is is their business model. So you buy a challenge, you lose the money, you know that's good for the prop firm because they get to keep your fee and they don't get to pay you out, which is great for them. So it's kind of a it's almost like they have an incentive to make you fail. So the fact that they make profit by keeping your money is something you have to think about, because that's a conflict of interest right there. um, Also, there's a lack of regulations when it comes to prop firm. Prop firms are, something new that just came around a few years ago. A lot of them haven't even been out for 2 years. My first funds hadn't even been out for 2 years good, and then they got shut down by the FTCC, FTCC. Sorry, I can't remember the name of it. The Canadian financial regulators. Um, so you gotta think about that. There's a lot of regulations. These prop firms can go bust with your money. You'll never get paid. They could run away with your money. So, it's almost like using an offshore broker, um, but an offshore broker that's promising you thousands to trade with. So I gotta think about that. So yeah. So another, problems if the prop firm goes down as well. You can't get your money out. Um, Once again, there's just too much rules. Um, Certain prop firms have so many rules put in place to the point where you, as a trader, you already have so much going on in the market. You already have so much going on with your psychology. You already have so much going on with your emotions. You have so much going. You have to think about. You have to think about your positioning. You have to think about slippage. You have to think about your lot size. You have to think about your emotional state. um, and the fact that some prop firms use so many rules when you know in the program, it just add this extra layer of nonsense that you just don't need to deal with as a trader, especially when the rules are just not in your favor. A lot of them makes it seem like the rules are in your favor, but they really aren't. Like with the equity drawdown rule that I don't like. Um, as we get to their drawdown rules, things like your equity drawdown, your daily stop out limits, the fact that if you're buying a $100,000 account, you're thinking you're getting 100,000, but really you're just getting 2,000 to trade with, because if you hit that 2,000, they pretty much take that account away. So stuff like that. And obviously, again, the endless loop of failing these challenges, spending more money, failing these challenges, spending more money, never truly getting to payouts where the amount of money you spend is essentially covered by the amount you got paid, because you never really get to pay out. Okay, so now let's move on to the pros of trading your own money. So obviously, one of the biggest pros of trading your money is the fact that you can pretty much just get paid whenever you want. It's your money. If you make a winning trade, you can just withdraw that money, go have a party, go buy yourself a nice watch or something with it, or whatever you want to buy. Um, it's your rules. You set your own rules. You set the way you want to trade. You set how you want to trade. There are no rules put in place on you as a trader, other than the potential limit of your account. Um, but other than that, you trade how you want. You trade what you want. There's no, oh, you can't trade the news, or you can't trade this certain product at this certain hour. It's none of that. So yeah, your rules. You trade how you want, and there's no fear of you know, of your broker going bust, or of your broker manipulating your entries or your stop loss or whatever. Although it does depend, because if you do use an offshore broker, you're much more at risk of them running off with your money, or of manipulations and stop slippage and stop hunting and stuff like that. So you know hopefully you guys are using regulated brokers. um that's just a smart idea anyways. But also, if it's in my opinion as well, for me personally. If you do think, if I do think the risk of using an offshore broker, such as the much higher leverage that I would get from using them, if I think they're trustworthy enough and they're giving me higher leverage, I would consider it. But that's me personally. I wouldn't suggest that for anyone else. Okay, so the cons is obviously you make less money. You need much more money to trade certain products, especially if you want to make more money. You probably have to trade micro lots and micro contracts to if you don't have as much money, which means you won't make as much. And obviously, there's also the risk of you losing a lot of money in the market, especially when um, you don't have as much experience. You're going to lose, and you're going to lose a lot of money. And especially when it's your money, there's a lot more emotions involved. So it can get really really bad. But as a lot of people, as you can say, this is the fee for trading. You just gotta understand that that is what it is. At least that's how I think it is, at least. So anyways, that is it, guys. Thank you guys so much for watching. um right now I am trying to trade the ES futures with Tradeovate. As I said in my last video, I am trying to trade the overnight one tick move in my favor to try and get a fill. Uh, Still testing this strategy to see how it works. I should have an update video for you guys. But anyways, that's it for tonight. Thank you guys so much for watching. Please subscribe. If you guys want to use Apex as a trader, you're trading futures and you want to use Apex and want to get 90% off this month, I have an affiliate code down below, an affiliate link as well, for you guys to check out. And other than that, that's it. Thank you guys. Bye bye.